Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bearish scenario, where we are looking for a zigzag 535 to the downside, where the most common target for wave C is between the 1 and the 1.236, sitting between 27k and 26.3k. Now that means we are then looking for a 5-wave move to the downside, with a rare target for C being the 0.618 at 28.1k. But if we zoom in to this local structure over here, we see a 3-wave move to the downside as a wave 1. Now for the deeper targets of a wave C, you prefer to see an impulsive structure, meaning a 5-wave move to the downside. But if you try to count 5 waves in this move to the downside, then this third wave is the shortest wave between the 1, 3 and 5, which is not allowed for an impulsive structure. So this counts much better as a 3-wave move instead of a 5-wave structure. But that then means that in a wave C, we can only think about potential ending diagonals for wave C, which is a 5-wave structure. It's just that all the waves are then going to be zigzags, and most commonly you have a contracting diagonal. Now if we then think about this zigzag over here being wave 1, then for a wave 2, most commonly the wave 2 in a contracting diagonal is retracing to the golden pocket to the 786 area, but as you can see, it retraced to the 0.382, which is a rare target for a wave 2 in a diagonal. Also, once we count this potentially as a wave 2, we then have over here wave 3, you would expect a 4 and eventually a 5, but also counting a 5-wave move over here and potentially a zigzag to the downside in this structure is very difficult, because if you would go to even lower time frames, then the 5th wave invalidates this being a potential contracting diagonal and then an ABC zigzag, for this then being the high of 2 and then eventually a 3, having a 4 and a 5. So this is a messy chart basically for a contracting diagonal to the downside. It doesn't count nice, and also the fact that wave 2 hit a very rare target, not a common target, does not really support the probabilities for a much bigger move towards the downside. And if we then go to the micro, as mentioned, this move to the downside basically dictates how deep wave C could go. If we then go to the 50-minute, I do at least want to show you how this is then counted, because this structure to the downside is important for the probability at the end of the video. So over here you can count a 5-wave move to the downside, correction, and another impulsive structure to the downside, right? Another 5-wave move and then an ABC. Very nice. But if we try to count this as an impulse in a 1, 2, then a 3, 4, 5, as this is kind of the only way you can count it, the problem is then this wave 3 being the shortest. And if you take a trend-based fib from the high of 1 to the low of 1 to the high of wave 2 and you put it on the 1-to-1, you can see that wave 3 is much shorter compared to wave 1. And if you take a trend-based fib from the high to the low of 3 to then the high over here of wave 4, and you toggle it to the right, then you can barely see it, but on the lower time frame over here, this wave 5, there you go, did cross the 1-to-1, meaning it invalidates an impulsive structure, which is important again from the for the probabilities that I will talk about at the end of this video. So basically in a bearish scenario, the only really bearish scenario is a diagonal. Doesn't look too great at the moment. So if we look at the more bullish scenario, we are still expecting a move to the upside. So we then have a wave 1 to the downside, looking for a wave B, for then a C to the downside in a bigger 5-3-5-wave move, where now inside B we are in a complex corrective structure, where the first structure was a wave W in an expanding flat, now in an X, so a WX expecting a Y. And that is then also what we're going to look at if we zoom in to this structure over here. So we go from the medium time frame to the low time frame, then what we're looking for over here is that WXY. Now W is then an expanding flat, X can be any structure, any corrective structure, which can be very, very complex, as it has proven itself to be. But what is important now is that this low over here, being lower than this one, has been made after the 0.382 fib time taken from the low to the high of wave W. Now a wave X, and actually the waves in general in comparison to one another, tend to finish their structure after the 0.382. So at least we can now look for the end of wave X, which potentially can be here, or maybe even down again to take this low. Yes, that's still possible. Wicking the low, closing above and moving to the upside is still a potential scenario, in this being a 3-wave corrective structure, where then after wave X is in, we are going to be looking for a move to the upside in a wave Y. Or, and this is something I like to at least consider, which is also something that Grim mentioned in the group just now. If I move to the upside over here, he says, I refuse to invalidate a flat. And I completely agree, because a flat is an ABC in a 3, 3, and then a 5 wave move. And you take the beginning of a flat over here from this structure. This is the beginning of A. And then A is a flat by itself, so we have a 3 wave in A. You're then looking for a 3 wave in B for then a wave C. So make sure you pay attention to that scenario as well, where this can also be an A, B, and then a wave C. And the difference is that this now is a 3, 3, and then a 5 wave move, so you get an impulse to the upside, while a WXY is a 3, a 3, and then another 3 wave structure to the upside. And I still look at that target, 30.4k. We have a triple top over here, which is very, very interesting indeed. And also, if we look at the target areas, we still have some more confluences over here that this high did not hit, and that is the target box between 30k and 3123 on my Coinbase chart. And if we then zoom in to this structure over here, what we could potentially be looking for, again, this is very, very complex counting over here. What we could potentially see is a W, very sideways corrective X, which inside X we're then looking for a W, X, and then a 3 wave Y, for then potentially now a 3 wave structure to the downside, where this is then the first structure, second structure, and the third one. It's not yet invalidated. Of course, we now took this low. We have a little bit of a bounce. So let's see on the lower time frames how this is working out. But if price is going to take this low, it does not mean, as mentioned in the ABC scenario, but also in this being a wave X, that we tank towards the downside, because then you would be looking for the potential swing failure pattern move, meaning you wick below, you close above, and then you'd be looking for upside. As mentioned in my previous video, I also said that if the double bottom over here is not gonna hold, we're going to be looking for the next low, which is this one. If this one is not going to hold, we look for the next low. And at each low, we're then looking for potentially that swing failure pattern move. So let's see how that is going to develop. Above price, I do think it's interesting that at least I show you these confluences over here, which are the resistance areas above price. The daily has been hit. The weekly naked point of control is still there, as well as the time naked point of control and the daily. So if price would move to the upside, keep an eye on those levels. And to the downside, this level at 28.552, which is the low, is very interesting indeed. And what I think is important to show you as well is the updates to show you how I think the moment that lows are going to be taken. So over here, this is in the update section of the Silver YouTube membership. And if I scroll towards the upside, you can see I've been very, very busy today when price was moving to the downside. And basically, you can read this for yourself. I'm not going to go through everything, but it does show you my way of thinking the moment stuff happens on the chart. And it all started with looking for that low at 28.946, right? The double bottom over here. And then I am, while the low has been taken, you can see that I am looking at the reaction. I'm updating the group. What am I looking for? What do I see? You know, and then eventually, as price is moving, more bearish divergences, la-di-la-di-la, right? You can just stop the video at certain sections. You can read through it, and then eventually you get an idea of, hey, what am I actually looking at the lower time frames? Of course, you see a lot of CVD divergences as well, a little bit of my thoughts. And this one is very important over here, where at the end, I do say that based on the three-wave structure that we have from 30k to the downside, as I highlighted in this video, probabilities-wise, it still means that one would still expect higher prices, right? And that is why also when we eventually go towards the probabilities at the end of the video, the probabilities are still a little bit higher for price to at least move to higher levels before moving down to, let's say, 27k. Now, if we first, before we go to the probabilities, look at CVD, then over here, this bullish CVD over here has now been invalidated. We first had, of course, this bearish CVD divergence, but that one was a reaction based on the bullish. So the bullish one was the first one that appeared on the chart. This one was second. So, you know, it doesn't get priority, this one. This one has the priority, but the moment that you get a bounce, price moves down, up, down, and then you get more local bearish CVD divergences again, that is the moment where I said, well, you know, this is very important. We now have a double bearish CVD divergence after the bullish ones over here. Price moved up, down, and can't retrace anymore without bearish CVD. So these are very important because there is some absorption going on. Not what you want to see. And if I zoom out just a little bit, we still have these bullish CVD divergences over here. As long as this low over here is not taken, these ones are still intact. So then again, keep an eye on what is happening on the CVD divergences very, very locally. You can go to the 3-minute, 5-minute time frames and whatever. At the moment, it's pretty neutral. So let's observe in the upcoming hours and the night what is going to happen. So if I then zoom out to the probabilities, then yeah, I mean, yeah, this is based on Elliott waves, mainly the 3-wave structure that we have over here. The probabilities, medium time frame, still expecting a bit of a move to the upside before a stronger move to the downside eventually in an ABC. Low time frame, well, up. And then again, 3-wave structure that we have here to the downside gives the probabilities for eventually a bit of a move to the upside. And the micro is the same, that if we look at the micro, this 3-wave structure over here dictates the probabilities at the moment. That's basically what I'm saying with the probabilities. And of course, as always, observe the reaction at the lows for confirmations. Have your strategy and plan, your entry requirements, make sure you know what you are doing to observe what's happening locally. Don't just randomly long or short, no financial advice, but have a plan, have a strategy. And if you want to also have a bit of a bonus at the same time, make sure to check this out. This is an event that launched today, especially for the Koenz community, for the Koenz trading community. You can read this, and if you deposit a bit of money on BingX, then you can also trade with some money you receive, that you can gain the profits. You can keep the profits yourself that you get with the reward, and the losses are covered then by BingX. So that's quite a nice campaign, with the link in the description and the pinned comment. So thanks for watching this video. I hope you found this video helpful or valuable. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.